Hello, traders. It's 8:01 a.m. Chicago time on Thursday, the 9th of April, 2020. This is episode number 1731. Thanks for joining me today. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we had a very important release that the market's been keeping an eye on. Initial claims in the United States came in at 6.606 million versus the expected 5.5 million. Remember, this number used to be around 190 to 210,000, and now it's at 6.6 million. The previous is 6.648 million, which was revised up to 6.867 million. Bad news all around. And of course, I'm sure you saw the rally. The SOC of that release in the S&Ps is 2714.50, currently trading 2768. So the market went higher, and it went higher because it just does, but also because the Fed announced that it's taking additional actions to provide up to 2.3 trillion in loans to support the economy. This was released by Fed's Powell this morning. The Federal Reserve also is beginning to facilitate facilitate the purchase of corporate bonds. It's just the market's just getting a lot of money, a lot of cash right now. So this bad news is really just more money being pushed into the market to help support it. The overall market sentiment this morning is bullish. Crude oil up 5%. A lot of releases relating to crude oil. The Department of Energy's chief here in the U.S. says he's optimistic that OPEC Plus deal will to stabilize the oil market is coming. The OPEC was supposed to meet today and come up with a supply cut that everybody would agree to, and the situation there is that Russia will not cut unless Saudi Arabia cuts, or Saudi Arabia won't cut unless Russia cuts, and Russia's not going to cut unless the United States cuts. The United States doesn't want to cut because the oil sector is already beat down. So stalemate there. But crude has responded, popping higher of $1.15, currently trading at 26.24 in the May contract, 4.58%. Gold has exceeded the 1700 century figure, trading at 1727, up $43 today at 2.55%. The Russell's up 27 or 2.13%. The Dow's up 325 points or 1.4%. The DAX is up. The Euro stocks are up all above 1%. The S&P is up 30 points, 1.11%. The NASDAQ, the weakest of the global indices I'm watching, is up 76 points or 0.93%. And of course, gold responding to the fact that the market's getting flooded with money, and is rising higher. It is the safety asset in that situation. The dollar is down 29.5 cents, trading at 99.87.5 in the June contract on the US dollar index futures. The bonds are off 4 ticks. Interestingly, the Treasury papers also higher this morning. The euro's higher, the pound is higher, the 10-year note's higher, the Bund is higher. So it's all just buy everything. It's a buy everything thing going on today. So anyway, risk sentiment is to the buy side, or allocations to the buy side right now, and that's what we're heading into. In terms of what's on the calendar, you already know about initial claims. We did get balance of trade from Germany, which came in stronger, forecast at 18.2 billion for the month of February, came in at 20.8. Must be nice to have a surplus. Balance of trade in Great Britain is 2.2 forecasted, and it came in worse. A swing, a big swing there. It came in down negative 2.8 billion. Initial PPI came in at negative 0.2, expected at 0.5. And then we still have wholesale inventories a half hour after the open. We have Fed's Chair Powell. Pay attention to this. We will likely respond to whatever comments he provides. Fed's Chair Powell at 10 a.m. Eastern, 9 Central. And then we also get Michigan sentiment prelim for April at 10 a.m. Eastern. That's likely to be a mover as well. This evening, we get the inflation rate out of China at 9:30 p.m., expecting 5%. We also get PPI out of China, but the inflation rate's important for those people trading the Asian markets. So that's where we stand. Here's what I expected. I expected yesterday. Where are you? Oh, man. There it is. Okay, so in our review segment, here's what I expected yesterday. The primary scenario, given the way the market closed on Tuesday, the primary scenario is no matter in either scenario, I expected a pop higher above the overnight high. I detailed why that was. I was looking for a pop higher, and the primary scenario was to resume for a push down to 26.45 and potentially take out the low, and the target down there would have been the 26.20 naked point of control. That was the primary scenario. The secondary scenario is exactly what worked out, is a test down into the 2660-ish area for a push. And as I outlined yesterday, expecting it, if it does hold up, I expect it back at the high volume node in the 2734 and a quarter area, as outlined here. If you're not seeing this clearly, if you're not seeing the video in front of you clearly, you can go to your YouTube channel. If you're seeing this on the edgeclear.com page, please click on the bottom right corner, I believe. Click on YouTube and then go to YouTube and click on this cog and switch the quality to 1080p, and then the numbers will be much clearer. Anyway, so that's what was expected. Here's what we actually got. As you can see, it was pretty much spot on. Scenario two. Scenario two was expected to hold 2660 right here. It pushed through by a fair bit, 6.5 points to 53.5. Never closed the gap, and then it pushes higher. And where do we end up? We end up building a high volume node and a point of control and resting right on top of that 2734 and a quarter area. And in the overnight point of control is where, yes, it's the 2735 area as well. So what do we have here? We have a point of control up here in this region. We have a high volume node. We have yesterday's point of control, and we have the overnight point of control all taking place in the vicinity of 2730 to 35. This is why I like to use volume profiling. It gives you a very, very clear idea about where prices were accepted versus prices were rejected. And you can see that prices here have a hard time just below the 2760, but at about 2757. And we are trading above there now. So what we've done is we've moved back, we've tested and held this area up here, this accepted area up here, and we've pushed through the neckline and are pushing into the next area up. I expect the market to rest up here for a bit, even though it's rallying currently. I expect it to run into offers. There's some liquidity up here. I expect it to hold this area or fight this area up into 85. I don't expect it at the moment to push any higher. Here's Bookmap. Here's what I'm talking about. You can see the offers coming in. These offers have been sitting here for the entire session. These are key. This area here, the 2770 to 2780 area, is a key area for sellers to defend, and we're seeing people jumping in here with their offers and selling off their positions or entering new ones. This is a key reference area here again. Again, this is ctbookmap.pro. We're seeing the liquidity in the market mapped historically, so we can see where the size is and how it's been acting. And you know, the buyers have been taking up and knocking out these liquidity areas, but we're running into a big one up here at 27.85. Okay, the release was down here, right down here for initial claims, and you can see that we immediately pushed up. Sellers at the top of this move pushing it back, but they got squeezed out, and it's been pushing higher and higher and higher since. It's likely to struggle. The S&P is likely to struggle in this area here for now. Not telling, that's not a trade recommendation. That's just an expectation of what we're seeing. Above here, we're up at the 2800, but you know, there's a key reference up here. Let's go back to the review screen. This is the composite. This is the daily composite chart. And you could see that we paused at the 38% and pulled back, held for 3 days, and we're pushing through. And here we are. We're right on top of that 50% of the all-time high. We're pushing. We are testing currently as we speak. We are testing the midpoint from the all-time high of 3382.50 all the way down to 2179.50. Remember, these prices are rollback adjusted prices. So if your prices don't match, it's probably because your data feed does not roll your prices and adjust them. But what we have here is 2781 being the midpoint and likely battleground. I expect that this high volume node from yesterday, which I mentioned several times, the 2734 area, that's this area that we stopped at yesterday. I'm expecting that to become a magnet down below. So if you're looking to get short this high liquidity area, again, here it is. If you're looking to get short this high liquidity area, then the key target is going to be this high volume node down here again. That's about 50 points away. Again, not a trade recommendation, but that's a classic setup for a short swing or an option. Again, this is not suitable for all investors, right? So we've looked at the Bookmap, we've looked at the liquidity above, liquidity, even more liquidity at 2800 above. You can see it coming in now. And then below, there's just hardly anything. So I'm expecting this, as I said, as the market was pushing up, as I said, I expect it to fail here. I expect it to turn around and then hold this primarily. The first area it's likely to hold is this 2766.67 area. If it fails through, then the 50 becomes key. 50 is also yesterday's high. 52.50 is yesterday's high. The day before that's high as well. Expecting that to hold for a little bit, and then beyond there, the balance is down here at 34.25 or so. So that's how things are laying up right here. So when I see that I have an important reference point plus liquidity, this is a key area for me to act on the market. I'm giving you basically the layout of how I'm looking at the markets here. So in real time, as it's setting up here in real time. So what are we expecting this morning? Let's take a look. This morning, looking for, a quick reminder, tomorrow is April 10th. Good Friday. All exchanges are closed. It's a holiday. Tomorrow, nothing will be open tomorrow in terms of futures and stocks, and so today is expected. We're expecting to have the positioning into the long weekend, and I believe that some exchanges are closed on Monday as well. So there's going to likely be positioning into the long weekend, so be careful on the close today. Okay. So what's the expectation for this morning? This morning, expecting an open auction out of range that attempts to push that high again. I'm expecting it to fail back, as I said, towards that 65 area and then pull back into the 2750. I'm expecting it to have a pretty good fight here for the bounce back up and then consolidating into the close before whatever happens into the close. Just be careful on the close today, expecting responsive selling from here. The secondary is that it attempts to pull back, consolidates, pushes higher, impulses, continues higher through this big 50% fib swing from the all-time high to the current low, to the most recent low. But I expect it to find a lot of resistance up here, come back in, and then consolidate to find itself in the same place basically without filling the gap. So those are the two key scenarios. Because we're opening above the range, we may see scenario 3 being an open test drive down. If it drives down, we're likely to see 2750 fairly quickly. We're likely to see it back at 34, consolidating and then pushing down into 2720 before right here, the low volume node, before we see the bounce. Those are the three key scenarios this morning. Scenarios 1, 2, and 3 ordered in the magnitude of probability. That's what we're looking at for today. Okay. Again, be careful coming into the weekend here, as tomorrow is a holiday and there's likely to be positioning. Good luck, and I'll catch you on Monday, and have a wonderful Easter weekend. Be safe, stay inside, stay home, folks. Let's keep everybody safe. Good luck, and I'll catch you on Monday morning. Take care.